Welcome everyone to Vested Interest. This is Shane. I am back for another video. Today we are going to be talking about Store Capital and what I am going to be doing about the recent news that's come out about Store Capital. They are being bought out. You've probably heard. I have seen some videos out on YouTube about this situation. So we're going to talk about what I'm going to be doing with my proceeds from this the sale of this stock. I haven't sold it yet. It is still in my portfolio. I don't believe they're going to be actually buying out until later in the year. They do have one dividend coming up, so that's another thing we will discuss here shortly, whether or not I'm going to wait for that dividend or not. I am interested to know what you guys are doing with your position in Store Capital. If you have one, are you going to collect the dividend? Are you going to go ahead and sell out early and roll it into other positions? We are going to cover what I'm doing here shortly. If you're interested in content like this, go ahead and hit that subscribe button down below. Join me on this journey to financial freedom. Hopefully you are on your own journey to financial freedom, and that's why you are looking for content like this. Here we cover my portfolio updates. I'll have a video out on Sunday, tomorrow, with my portfolio activity for the week. I do those every Sunday, so don't miss those. I also do a stock pick of the day Monday through Thursday, where I try to find stocks throughout the week that have pulled back and are potentially presenting value. Again, if you're interested in that kind of content, go ahead and hit that subscribe button down below and ring the notification bell so you're notified when we put out new content. And if you like this video at any time, go ahead and hit that like button or the thumbs up button down below. With that said, let's jump right into the video. So as we already said, shares of Store Capital, ticker STOR, on the New York Stock Exchange soared in the morning trading on Thursday as the Real Estate Investment Trust REIT, and this was a little over a week ago, announced that GIC, a global institutional investor in Oak Street, a division of Blue Owl, a large net lease investor, will acquire Store Capital in an all-cash deal valued at $14 billion. I believe that amounts to $32.50 per share, $32.50 maybe is what it amounts to. Go ahead and look that up for yourself and correct me if I'm wrong down in the comments. It may be $32.25. I believe it's $32.50 per share. And Store was down significantly at the time of this announcement, and you did see it shoot way up. So I was actually in the negative there, and then after this news I am positive. You'll see that in a minute. Let's go ahead and click to the next slide. As I said, up currently 5.72% on the position. I have $5,108.27 into the position. It is currently worth $5,397.17. And the stock price currently sits at $31.56. 171 shares, 171.013 shares, but that's pretty negligible, 0.013, so 171 shares really. And as I stated, the ex-dividend date is the 29th, coming up this next week. So if you hold the shares on the day of the ex-dividend date, you will receive the 41 cents per share. So that is quite a conundrum there. Do you wait? I could have sold this week around $31.90 at one point. It has actually shot up just over 32 there for a brief moment. Excuse me. Where I caught it. So we could have sold it at 32, a little over. But I'm continuing to hold. I think at this moment I am going to go ahead and hold through at least the ex-dividend date and collect the next dividend on the 171 shares, and then I will see where we're at, and if we're around this 31.56, hopefully above that, I'll probably go ahead and pull the trigger and not wait till the final sale and then just roll those into some other positions. We'll see that in a moment, what positions I am looking at and why I'm thinking of doing that. But if it happened to get up in the $32 range, I may not even wait for the ex-dividend date. It really depends on where it sits. If it hovers around this, which most of this week it has, 31.56 to 31.80 is where it's been pretty consistently all week. Seems like some people are using the arbitrage play, because if you bought it at 31.56 and it pays out at 32.50, right, you're going to receive that difference. So it's like building in a little bit of a dividend, even if you don't wait for the dividend and you just bought it, collected the dividend, and then, like I said, the difference would be that almost $1 here at 31.56, and if it pays out 32.50, that would be almost $1 difference. So you've built in $1.44 or $1.41 dividends whenever they pay out at $32.50. So not a bad arbitrage play if you're looking for something like that. You know, you buy 1,000 shares or something like that. If you've got that kind of money, that wouldn't be a bad deal. You'd make a little over $1,000, you know, $1,400 or something like that. So not a bad arbitrage play. Not something that I'm looking at doing. I'm not adding to my position. I'm just sitting on it right now, trying to figure out what I'm going to do. So let's talk a little more about that. And here is where it was at again, 31.58 at the close of business on September 23rd on Friday. Looked like it might have gone down a little bit in the after hours, so that's probably where it stopped at that 31.52 that we saw on the previous slide, or 31.56 maybe it was. And again, 52-week range isn't as important, but it's been as low as $24.48, as high as $36.13. I don't expect it'll get much higher than it is now. Obviously, if it's going to pay out at $32.50, why would I pay more for the stock than that? As you can see, the volume is significantly higher. These are probably people buying in and then other people selling out. Average volume 4 million. It's currently at 10.9. So volume has crept up quite a bit. Market cap of 8.927 billion. Beta of 1.17. Definitely more volatile than the overall market. And again, that's probably because, and here's where it was at, just over 31.70, right? Got up into the 31.80s, like I was saying. So it wouldn't be a bad, I mean, if it's paying out at $31.50, you're missing out on about 60, 70 cents there at that point. PE ratio, not as important for REITs. You want to look at funds from operations. Earnings per share is $1.19. Does have an earnings date in November, but again, if they're selling the position, none of this is really that important. The forward dividend yield is important because it is a higher yielding REIT, 5.17%. So when we're looking at rolling this position into other positions, we want to be cognizant of this dividend yield. We want to try to match this so that we don't lose a significant amount of our dividends that are paid out. That's income that we want to maintain. Ex-dividend date we saw September 29th, and their one-year target $30.82, which again is irrelevant. They're $32.50 payout, so it doesn't matter what their target date is. It's not going to be a publicly traded company anymore. So one of the positions I'm looking at is Realty Income, and what I'd like to do, I think what I'm going to do here, you're going to see 3 positions coming up. I'm going to split it between these 3 positions. That is what I've kind of figured out in my head here. I've done the math, and it should equal out or be a little on the positive. You'll see that as well. But the first one, I would bring Realty Income. I'm currently sitting at 59.634 shares. I'd add 41 shares here and bring that up to just over 100 shares, right? That cost would be 2,624 of that 5,400. We'll just call it, I know it was $5,397-ish dollars and some change, but we'll just call it 5,400 for easy math. So we'll use 2,624 of that 5,400 to add 41 shares of Realty Income. I am down a little bit, so that will decrease my cost basis and increase my future potential yield, as well as increase my position in Realty Income and bring me over 100 shares. Currently, Realty Income sits at 61.81 and 52-week range as low as $61.03, so definitely closer to that 52-week low than the 75.40 high. Volume is a little higher at 4 million, average volume at 3.6. Market cap of 38.172 billion, beta of 0.73, so it's less volatile than Store is. PE ratio, again, we don't really look at this. Look at funds from operations. Earnings per share is 99 cents. It does have an earnings date October 31st through November 4th. Forward dividend, $2.98. This pays out monthly, so you'd want to divide this by 12. And it does have a little lower yield than what we saw in the previous slide for Store at 4.76. Store was at 5.13. So this would be a little lower yield, but this would not be all of the funds from the sale of Store capital. Ex-dividend date is coming up just like Stores is the day after, so September 30th for Realty Income. Stores was September 29th. And a one-year target estimate of $76.56, so speaks to some upside stock price appreciation. The next position we would be looking at adding to would be LyondellBasell, and we would add 29 shares to bring this, and you'll see a theme here, to bring this over 100 shares as well, and that would be 29 shares at $75, 2,175, so 26 plus the 20 100 here would be about $4,800 out of the 5,400. And in this one, currently I'm down as well, significantly, at 21.85% down. Cost basis is $93.51. Currently sitting around $73.07. I have $6,675 into this. It's currently worth $5,215. So this would bring this to one of the larger positions in my portfolio. I would be decreasing this deficit here, increasing my yield. And let's take a look at the next slide and see. Yeah, very nice yield here at 6.51. So this would be a higher yielding stock than what, and that's kind of what I did. I averaged out the yield among these three positions that I'm looking at. But let's look at it. $73.08 at the close of business. LYRB, ticker LYB. 52-week range as low as 71.46, as high as 117.22. So at 73.08, definitely closer to that 52-week low. Another one that volume is up. Average volume 2.2 million. Current volume 2.7. Market cap of 23.83 billion. Beta of 1.29. So about the same volatility as Store there. PE ratio, this is what I like though. PE ratio here extremely low, 4.45%. Earnings per share sitting at $16.44 per share, extremely high. So very nice earnings per share here. I don't really focus on that, but people who do would love this. For dividend, $4.76 paid out on the year. This is quarterly payers, so divide by 4, and a very nice yield, 6.51%. Again, that's kind of what I'm looking at for to balance out the yield of Store. So this one would be a higher yield. Ex-dividend date was August 26, 2022, so they should have another one in late October or November. And a one-year target estimate of $93.88. The last position we would split up the funds from the sale of Store would be HPQ, HP, and we would add 25 shares there. I'm sorry, that says 41, but it should say 25. And again, my cost basis is $27.84. It's at $25.37, and I have $2,644 into this position. It's currently worth $2,410. So another one, I'd like to decrease my cost basis, increase my yield. Look at them. So at $25.35 close of business on Friday, ticker HPQ, out of the information technology sector, and LyondellBasell was out of the materials sector, and Realty is out of the REITs and real estate sector, just like Store Capital is. 52-week range, $24.92 for a low, $41.47 for a high. At $25.35, definitely closer to that 52-week low. This volume is lower than average. The other two were higher, but currently at 8.3 million. Average volume of 9.1 million. Market cap of 25.501 billion. A beta a little less volatile than the overall market. PE ratio, another one with extremely low PE ratio, 4.52. Earnings per share of $5.61. Next earning date, November 21st through November 25th. They'll announce it somewhere in there. For a dividend of $1. They do pay out quarterly, so it's basically 25 cents per share. And a yield, this is a little lower, but whenever, again, if I average them out, it'll be a little bit higher at the end of the day. You'll see that here in a minute. But the HPQ's yield is 3.85. Ex-dividend date was September 13th, and a one-year target estimate of $30.55. Now again, here are the three positions that I'm thinking of splitting these out between. We were around $5,400 if we sold today. I am trying to get it as close to $32 as I sell it, when I sell it, even if it's after the ex-dividend. Hopefully some people pile into it. Like I said, for an arbitrage play, it should drop by the 41 cents on or after the ex-dividend date, so some people might flood into it, because then it would be about $31 per share, which would be about $1.50 per share arbitrage play if you were looking to do something like that. Some people might find that attractive. Oh, excuse me. My sinuses are bugging me this time of the year, so I do apologize for that. But the three positions I'm looking at again are Realty Income, LyondellBasell, and HP. 41 shares of Realty Income at 2,600, 29 shares in Realty Income. I've estimated these a little high. I know that Realty Income isn't at $64 per share currently, but if it happens to bounce back next week, I want to account for that. So I've estimated these all on the high side. So 41 shares times 64 would be 2624. 29 more shares of LyondellBasell at 75 per share. I know it's only about 71, but again, I'm estimating high, so that would be 2,175. HP, 41 shares at 25, another one that I'm estimating high. That would be 650, and that would be $5,449. And whenever we were looking at store, it was around 5,397-ish. So again, even if I had to add 40 or so dollars, not a big deal. That would bring me to 100 shares of Realty Income, 100 shares of LyondellBasell, and 120 shares of HP, but bringing them all to 100 shares or more. So that is the idea. I am able to then, at that point, start looking at possibly selling covered calls on some of these positions to help increase cash flow as well. So I'm trying to get all the positions within the portfolio over 100 shares so that I can potentially do that in the future. I have done that a little bit throughout the year, this year on some other plays. So it is something that I'm looking at. I don't really do it very often because I don't have a lot of shares, over 100 shares, where if I lost the position, I'd sell out of completely. So I will continue to build out all my positions to 100 shares so that I have that option. It also, my bank does some loaning where if someone wanted to do that short or something and they wanted to borrow my shares to do that, I would end up making a little bit of funds that way as well. So having over 100 shares is important to me. May not be important to you. Now, I also played around with my spreadsheet where I track my dividends and my dividend income, and I looked at with store in the portfolio currently. My yield is 5.351%. My yield on cost is 4.765, and that just means 100% of the positions are accounted for. And my current annual dividend income will be $4,102.24 with store in the portfolio. Now, if I was to sell store, let's say Monday morning, and do what we talked about with these three positions, reallocate the funds among these three positions, my dividend yield would be at 5.366%, so a little higher. My yield on cost would be a little lower at 4.714%, again accounting for 100% of the portfolio. And my annual dividend income would be slightly up by about $5 and some change to $4,107.82. And that really was the goal. When I sell out of store, or they buy me out of store, either way, I'm going to be out of store because it's not going to be a publicly traded company. So if you own it, it's going to be the same thing. You should be starting to look at what you want to do with your funds from store, where you're gonna reallocate them, or you're gonna take the cash, whatever it is. So that's really what this portfolio is about. Drop down in the comments below. Let me know what you guys are doing with your position. Would really love to hear it. With that said, that kind of wraps up this one. I know this was a little longer than normal, but I wanted to go through my thought process for how I would reallocate those, how I sat down and kind of did the math there between the different positions. I even thought of just dumping it all into LyondellBasell because it's a higher yielding dividend stock that is down significantly right now. But to be honest, I don't want to make it that large of a position in my portfolio. It's already going to be a little larger whenever I do this than I want. But what I'll do is I'll stop adding to that position, and I'll continue to adding to others, and then eventually it won't be as large of a position. So, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Like I said, let me know what you are doing with your position in store if you have one, or if you've had a similar situation where a company's been bought out and you had to roll funds in. How did it go? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great weekend. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk, gambling money, and should never invest any amount not comfortable losing. Always do your own research. Best based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.